EuroDollar. So now the monetary authorities have thrown absolutely everything at the markets. The QE3, which was hoped for and wished for by the people who believe in illusion and magic, they got it. The impact was a big fat zero. So now we're back to the drawing board, we're back to data watching, and we essentially need to figure out what are the tail risks coming up. For overall, we see the EuroDollar as having top above 131. We see a test towards the 125 over the next couple of weeks, and long term towards the 120 again. Monetary experiment has a tendency to lead to other countries, which we saw in Japan last week, and probably what we will see and extensively we'll see in the ECB. So everything will be back to square one in terms of who's printing money. That is not a driver in itself. We think the US growth is still stronger than the European one all the way through next year. That will lead ultimately to a slightly higher expectation of higher rates in the US to Europe, which we think will drive it. And cyclically, we think the US is going to take over the growth engine from Asia overall. So we remain very, very bullish on the dollar long term. But for now, we need to respect the fact there's a lot of money who is trying to chase yield. That generally leads to a weaker dollar. But those two offsetting forces, we think, will be at the end of the week balanced out. And the net result will be that we start to drift low in the EuroDollar, and we could easily see 125, 126 over the course of this and next week. So overall, a constructive view on the dollar and a slightly negative on the euro, with the tail risk coming back with Greece and Spain, and in the US with the fiscal cliff. Have a great week.